Chief Executive Officer and Director of Endeavor Bank, I welcome you to the 2022 Annual Meeting of Shareholders of Endeavor Bank. I will act as Chairman of this meeting. Jessica Lucaro from Computershare is on the phone with us and has been appointed to act as the Inspector of Election to examine and tabulate proxies and ballots at this meeting. I would now like to introduce the other directors: Julie Dubeck, Joyce Glazer, James Ledwith, Matthew Radner, our Chairman, Stephen Sefton, our Bank President, Vicki Turner, Christopher Woolley, of course myself, and absent is Lauren Hover, who's on vacation. Joyce Glazer will retire as a board member and move into a newly created emeritus position where she will be available to consult with the bank. We greatly appreciate all Ms. Glazer has done during her tenure as a board member of the bank. Joyce is the first of our founding board members to graduate to emeritus status. Joyce has been involved with the bank for 6 years. You're probably saying the bank's only 4 years old. We had a couple of years of formation where our board members worked tirelessly to help raise capital, set up the infrastructure, and get us to pre-launch. And for most of those years, our board members worked without any compensation. They gave of their community spirit, their time, and their resources and talents. During her time on the board, Joyce opened many doors for us, particularly in the nonprofit sector of our community. Joyce, we will miss your candor, your fine taste, and advice on creating the best possible image for Endeavor. Any shareholder who hasn't yet voted or wishes to change his or her vote may do so by providing a proxy or ballot here at this meeting to Dana Murphy. Any shareholder who has sent in a proxy or voted via the telephone or the internet and does not want to change his or her vote, that's most of us, does not need to take any further action. Ms. Lucero, do you have the list of shareholders of the bank entitled to vote at the meeting?
Yes. The list of shareholders of record of the bank as of March 25th, 2022 shows that as of that date, 3,381,349 shares of common stock were entitled to vote at the meeting. Notice of the annual meeting and of the availability of the annual report of the bank for the year ended December 31st, 2021, and the proxy statement for the annual meeting was sent to all shareholders of record on the record date, on or about April 7th, 2022, based on the report of the transfer agent for the bank, Computershare.
Ms. Lucero, do we have a quorum?
A preliminary count of the shares represented in person or by proxy at this meeting indicates that the holders of the majority of the outstanding shares of common stock as of the record date are present at the meeting in person or by proxy, constituting a quorum.
As indicated, a quorum does exist. Therefore, the meeting is duly convened and open for business. As stated in the notice of the meeting, there are 4 proposals to be considered and voted upon by you, our shareholders. Number 1, to approve the formation of the bank holding company through the reorganization of the bank pursuant to a plan of reorganization and merger agreement. Proposal 2 is to select 9 directors to hold office until the 2023 annual meeting of shareholders. Number 3 is to ratify the appointment of I. Bailey, LLP as the bank's independent auditors for the fiscal year ending 12/31/2022. And finally, our 4th proposal, to approve the adjournment of this meeting, if necessary or advisable, in order to solicit additional proxies in favor of Proposal 1, if there are not sufficient votes to approve Proposal 1. So each proposal is more fully described in your proxy statement which you've all received. In order to expedite the flow of business at this meeting, we intend to adhere to the following order of business. Each of the matters to be discussed and acted upon by the shareholders at this meeting will be discussed in the order set forth in the proxy statement. After discussion of all proposals, the actual votes in each proposal will take place. The first proposal is to approve the formation of a bank holding company through the reorganization of the bank pursuant to a plan of reorganization and merger agreement, which would result in the bank merging with a subsidiary of Endeavor Bancorp, thus becoming wholly owned by Endeavor Bancorp, and the shareholders of the bank, all of you, will become the shareholders of Endeavor Bancorp in the same proportion as your share ownership of the bank. Your board of directors has approved the formation of a bank holding company through the reorganization of the bank pursuant to a plan of reorganization and merger agreement, and has recommended that the shareholders vote for the proposal. This proposal will be approved if the majority of the outstanding shares vote for the proposal. At this time, I will ask if there's any discussion of the approval of the formation of a bank holding company. Hearing none, I will move to the second proposal. The second proposal is the election of 9 directors of the bank to hold office until the 2022 annual meeting of shareholders, and until their respective successors are duly elected and qualified. As mentioned, Joyce Glazer will retire as a board member and therefore is not a nominee. The persons nominated for election by the board are Julie Dubeck, James Ledwith, Jillian Murish, Lauren Polger, Matthew Ratner, Stephen Sefton, Vicki Turner, Christopher Woolley, and myself, Dan Yates. I would also like at this time to introduce Jillian Murish, the newest director nominee. Jillian co-founded Peer Asset Management, an investment firm best known for its expertise in alternative credit. Her skills include knowledge of fintech, accounting, warehouse lending, investment banking, finance, and investment. These are all the great skills that we can leverage in our company, and I'm delighted to have Jillian on our ballot. The board of directors has recommended that shareholders vote for the election of each of these nominees. The 9 nominees receiving the highest number of affirmative votes will be elected as directors. Information concerning their principal occupations, their service for the bank, and other matters that may be of interest are contained in the proxy statement. Under the bank's bylaws, shareholder nominations to the board of directors may only be made by advance written notice made in accordance with the terms set forth in the bank's bylaws. Since no advance notice was given, there can be no nominations from the floor. That moves us to proposal 3. The third proposal is to ratify the appointment of I. Bailey LLP as the bank's independent auditors for the fiscal year ending 12/31/2022. Their board of directors has approved the appointment of I. Bailey LLP and has recommended that shareholders vote for the proposal. This proposal will be approved if the majority of the votes cast are for the proposal. So that brings us to our fourth and final proposal, which is to approve the adjournment of this meeting, if necessary or advisable, to solicit additional proxies in favor of proposal 1, only if there are not sufficient votes to approve proposal 1. Your board of directors has approved the adjournment of this meeting, if necessary or advisable, in order to solicit additional proxies in favor of proposal 1. As I said, if there are not sufficient votes to approve proposal 1. It is now 6:08 p.m. on May 17, 2022, and I declare that the polls are officially open. As I said earlier, any shareholder at this time who has not yet voted or wishes to change his or her vote may do so by delivering a new proxy or ballot in person. That is, if they're attending in person, which all of you are. Last time I checked. Please note that you must be a shareholder of record to submit a new proxy or ballot. If you should hold your shares to a broker or in street name, you will need a proxy signed by the shareholder of record. We will provide approximately 30 seconds more for shareholders to do this. Don't all run. Most of you, I think, have already voted. So, are there any shareholders at this time that would like to change their vote or cast a vote? We will now hear from the Inspector of Elections, who will read the report of the Inspector of Elections.
The report of the Inspector of Elections confirms that a quorum is and has been in attendance at the meeting for all purposes and states that, with respect to Proposal 1, a majority of the outstanding shares voted to approve the formation of a bank holding company through the reorganization of the bank pursuant to a plan of reorganization and merger agreement. With respect to Proposal 2, the 9 properly nominated candidates receiving the highest number of affirmative votes were Julie DeBick, James Ledwith, Jillian Murish, Lauren Polger, Matthew Ratner, Stephen Sefton, Vicki Turner, Christopher Woolley, and Dan Yates. With respect to Proposal 3, a majority of the votes cast voted to ratify the appointment of I. Bailey LLP as the bank's independent auditors for the fiscal year ending December 31st, 2022. With respect to Proposal 4, a majority of the votes cast voted to approve the adjournment of the meeting if necessary or advisable to solicit additional proxies in favor of Proposal 4 if there are not sufficient you should vote to approve proposal number 1.
Well, based on the report that you just heard by the Inspector of Election, all proposals as described in the proxy have been approved. Thank you for voting and your support. This now closes the part that I have to read, and now we get to go off script. We get to talk to you. Now we are into part 2 of the meeting. And I'd like to now advance our slides and talk a little about 2021 milestones and our year in review. But before we go there, my attorney says I have to read, or at least ask you to read, the forward-looking statement. What does it say in short? It says I can talk about what I think will happen. Steve can share his projections. Dana, our CFO, can. But there's a lot of variables that can change, and I can't promise you they'll happen. But we've been pretty good for 4 years. So, with that, if you've all read it, we can now talk candidly. So where have we gone in all these years? For 2018, as you can see, we had 5 people. We asked for our team to stand up earlier. You see there's a lot more people in this room. Well, we're 45 now. We had 2 locations when we opened the bank. And now we're looking at adding 2 additional ones. We'll tell you more about that in a minute. We had $26 million in capital thanks to most of you who are here in our first round and those who have joined us since that time. And now we have over $33 million in capital with another 13 we're going to add thanks to your vote to approve the holding company. We'll talk about that in a moment. We had 0 loans and now we have over $333 million. Same with deposits, 0 deposits day 1, now $349 million. And when we told you in 2018 that we had a goal of adding about 100 client relationships a year, you have to put that in perspective. If you take 300 or 400 clients and look at 300 million, you get a pretty good idea of who our target client is. Most of our clients have 7 figures in loans and deposits, not all, but the majority. So we're sort of a boutique business bank, and we've come to realize that vision. What you may not know, and it's kind of surprising, we have just under 5,000 banks in the country today. If you take a look at the list of banks, we are now larger in just 4 years than 60% of all the banks in the United States. Many of those banks have been around for dozens and dozens of years in parts of the country that don't have the kind of economy that we enjoy here in San Diego. They don't have the kind of team we've assembled or the business model. So a lot of factors that have attributed to that, but we're very proud, and you should all be proud of your bank's record in 4 short years. I'd now like to show you a couple of ratings that you may or may not be familiar with. But in our industry, the Bauer rating is known across the country. It's one of the independent rating agencies that looks at all the factors that contribute to a bank's success. Everything from the quality of earnings, how fast you grow, do you have good loans, bad loans, profitability. And the highest rating you can achieve from Bauer is a 5-star rating, which we received last year. Very few banks achieve that, and again, it's a tribute to all of you for helping support your investment. In addition, the Finley Report, which is more widely known for the last 50 years in the Western U.S., started by Gary Finley, rated us a super premier performing bank, which is their single highest rating, and very few banks achieve that. Both those ratings were obtained in the last year, and again, I want to thank you for your support for helping us achieve these prestigious ratings. So thank you. The FDIC has a definition for a well-capitalized bank. Technically, for Tier 1 risk-based capital at 6.5%, and after 4 years, we're well above that ratio at 9.68, and the same you can see on your slide for total risk-based capital. We're well above the legal definition of well-capitalized bank. Why is that important? Our clients look at the bank in terms of safety and soundness to make the decision to put their deposits with us. You as shareholders need to know that your investment is sound. Banks can get and do get in trouble more often than not when they are not well capitalized. So we're very proud of that, and we just added to this most recently through the subordinated debt offering, which we're going to talk about in a moment. We've had several capital offerings, two of which you know about, two of which are probably off your radar. The third is unofficial, which happened during the PPP program. We'll talk about that. And now the sub debt. All of these are contributing to our capitalization of your company. We've talked a lot in the last couple of years about PPP. Hopefully this will be the last meeting that we will spend any time on this, but I think we should at least give it one final chapter. I'd like to tell you a few things you may or may not know about this bank's participation in this program. Across the nation, almost every community bank and large bank joined forces to help the small businesses in America that were hit when we shut down the country due to COVID. All of you in this room were probably affected in numerous ways. We had roughly 25 employees, and if you look at the number of loans we did per employee, we finished in the top 10 in the United States. We originated over 300 PPP loans, 300 million. That generated about 10 million in income for the bank. And as of today, we're down to about 7 million approximately that have yet to be forgiven. So we've had 98% of those loans forgiven to date. We touched over 1,600 Southern California companies, and we impacted many thousands of jobs that were related to those companies. But more importantly, PPP has sort of paid a dividend to the bank that keeps giving. Almost every day we receive phone calls from business owners who say, "You didn't make my PPP loan, but I know somebody who you helped." Because of that, we'd like to know if you could help us with our business, a line of credit, a real estate loan. The goodwill, the name recognition, the awareness in our community because of what we did in PPP is still paying dividends to our bank and to all of you. So it was what I would say a supercharged method to grow our bank. Something we could not have planned for in 2018, but we took advantage of when the opportunity presented itself. So again, I want to thank our team for the hard work they put in over a couple of year period. If you look at the blue bar in this graph for total loan growth, in almost every year of my banking career, this graph would only go one direction, that's up. Because that's usually what banks do. We make what's called core loans. What are core loans? It's not a legal definition, but it basically is any loan that's not a PPP loan. Why do we treat PPP different? Because PPP loans were never intended to be on our balance sheet for very long. By their very design, the way Congress designed PPP loans, we were to make them and work hard to have them forgiven. So it inflated our balance sheet, it inflated the size of the bank, it created a distortion to the world about how the Endeavor Bank was doing. But your board, your management team, continually throughout PPP looked at our bank without PPP, because that was important, because we really needed to know how we were doing. Well, if you look at that blue bar, in just the last year, we grew our core loans by over 70%. That's been a tremendous amount of work, a lot of goodwill in the community, different types of loans, and our loan growth continues to go strong. How do you fund all those loans? Well, there's nothing more important to a bank than deposits. Let me tell you something about deposits. Our industry had an unprecedented amount of deposit inflows as a result of all the stimulus spending we had in Congress. Trillions of dollars, we all know about it. We all saw the results of that stimulus spending in our country. Well, most of that money ended up in banks. And we've had so much liquidity for so long that interest rates have been near zero. But lately, with all the increase in loans and inflation, we're starting to see deposits run off. We're seeing it at Endeavor, we're seeing it across the nation. So although this bar looks positive, it's going to be a challenge to keep up with our loan growth as we face new challenges going forward. We'll talk about those in just a minute. Now I'd like to point to something very important to all shareholders, and that is, are we making any money? So when you start a bank, and as we told you in your offering circulars and many times in meetings like this, we knew starting out we would lose money. Every new bank in the country as far back as I can recall, starts off with losses. The goal is to grow into profitability by making loans, making good decisions. In 2020, aided by the PPP program, we turned our first profit of $1 million. Last year, we earned over $5 million. I do not anticipate, and nor should you, that we will repeat that in 2022. PPP is sunset. But what is good news in these numbers is in addition to our overall profitability, we did achieve as a bank core profitability. What is that? That means when we exclude the benefits of PPP, we still would have been profitable without PPP. And that was our goal when we started the bank. We crossed over quite a while ago, and we are now clearly making positive gains in each and every month. So again, we appreciate the turbocharged result of PPP, but more importantly, we now have a revenue stream that we can look to the future to reward our shareholders. So I've been receiving phone calls for the last few months from all of you and others outside the room saying, what is this sub-debt that we're doing? Why are we forming this holding company? What's this all about? The question I heard more often than not is, are we selling the bank? You read these things about the merger and what does all that mean? Well, to put it very succinctly, we knew rates were going up, the worst kept secret in America. We also knew that the window for sub-debt was closing, and closing fast. So your board went out and tried to engineer a way to take advantage of low interest rates prior to today's meeting when we formally formed the holding company. Typically, you would form the holding company, then raise sub-debt. We accomplished that about a month ago. We raised $15 million. And you say, well, what does that mean? Well, if you look at this slide, roughly speaking, this is a bit of a approximation. For every $15 million that we raise in capital and sub-debt, we can generate about $150 million in assets. So if you do simple math, if you pay 5% of $15 million and you loan at 4 or 5% at $150 million, it's about a 20% IRR, not diluted to shareholders. It's the lowest cost of capital in your capital stack compared to common stock, which is the most expensive. Most banks try to take advantage, to the extent they can, of sub-debt, but it's very difficult to obtain sub-debt to get investors to buy it until you achieve profitability. So we hit the market at the right time, being profitable. The window is still open. We still got in there before the rates went up. And I would say this is another home run for you as shareholders. So congratulations that we got in under the wire. If you now look at these bars of your capital, we started off with over 26 million. When it hits our opening balance sheet, it's shown here at 24. I won't get into all the math on that. But as we lost money the first couple of years, then we had capital raises and PPP and now sub-debt, you can see that when all of this settles out, and this is a non-GAAP because it'll happen in the first quarter, not at year-end as I portray here, we'll end up with about $46 million. What does that mean? That means we can grow this bank, all things being equal, to at least $460 million in assets, which is at least a year and a half to 2 years of continued growth. That's important because we have a great engine of growth. We want to take advantage of that. And the goal over time is to have our profits keep up with our growth, so we don't have to continue to raise capital, sometimes in a dilutive fashion. So this is a very important measure to be aware of and understand the association between the capital we raise and the ability of this bank and all banks to leverage that to your benefit. So this is a good bar to go in the right direction. Let's talk about the future. Where are we going next? Recently, I had a chance to listen to the CEO, soon to be retired CEO of WD-40. Show of hands, how many of you have a can of WD-40 in your house? Pretty much all of you. Gary Ridge, if you've ever had a chance to listen to him, is now speaking around the country on the value of culture and values and driving the stock value of WD-40, which has been tremendous over the last many years. And his quote is, it's all about the people. Purpose-driven, passionate people, guided by their values, create amazing outcomes. And truly, it's our culture and our values that has made us who we are, and is our great differentiator in the market. Very proud of this team. I'm proud of my business partner, Steve. He leads our program called EOS, which is all about setting our values, hiring, and living those values every day. So now, let's talk about consultative. We've talked about it since before we opened the bank. We talked about it in every staff meeting. We talked about it in every client meeting. But what is it? It is our key distinctive differentiator in the marketplace. It's what separates us from other banks. It's a very intentional way of doing business to help business owners scale, to solve their pressing issues, and help them overcome that. We live consultative banking every day, and it has proven over the course of the last 4 years to be a competitive advantage when we go up against more Main Street banks that are really more of a commodity in how they focus on it. Next slide, club membership. Who is the club? Well, look around. You are about 20% of the Endeavor Bank shareholder club. Many of you bought stock in this bank for one reason only, is to be in this room. To form relationships, to build community, to help one another with experiences, with business. And we have created a flywheel that is unlike anything I have seen in my banking career. The majority of our growth over the last 4 years has come not from business development efforts, not from marketing, but from inbound shareholder referrals. Each and every day, those of you in this room and those of you who are not able to make it tonight have really built this bank by introducing us to your inner circle. And we appreciate and we value those referrals very much. So I thank you for that, and I hope they will keep coming. But we've just scratched the surface. Our intention when we opened this bank was to have events like this 3 or 4 times a year. Many of you have called me time and again, called Steve time and again. When's the next event? This thing called COVID occurred. We weren't doing events in this country, not most of us. And I'm glad to see that so many of you braved coming out tonight, and I call it that because we still have a lot of shareholders who are not ready. And hopefully in the months and years ahead they will be. But we hope that you will see, and you have a pamphlet on your table of our next event coming up. You're going to see more events, more shareholders, and these events are going to be learning events. We're going to talk about issues that are important to you because you're telling us are important to you. The next event is really about the Great Resignation. Almost any business in America has been affected by the outpouring of employees, either to work remotely, to change jobs, inability to find people to fill key spots. We hear it loud and clear, so we're going to create a panel and talk about it. We want to be the bank that you go to hear solutions and ideas and suggestions on how to solve these pressing issues. That just happens to be the next one. We hope to have a series of these, and I hope you'll be able to attend as many as possible. And finally, I want to talk about technology. We have a value at the bank called Kaizen. Most of you probably have heard of that, and you know that it's a number of incremental, continuous improvement on a process or a procedure. We invested heavily in technology, but you can't rest on what you did in 2018. Our banking industry is changing, our world is changing. We're continually, daily, weekly, monthly, quarterly, yearly, looking at different technologies. We're about to upgrade to a new technology called Encino. It's a game changer for most banks. Usually they're $1 billion in assets before they bring on that type of technology. It allows us to better serve our clients and have a more efficient process for loans. We're also investing in digital banking and the technology called Bono. We've already launched it for our consumer clients, but we're about to launch it for our business clients. Again, it's a tool that'll help you have more protection against cybersecurity when it comes to ACH and wires, and it's a state-of-the-art technology. This time, next year, we expect to give you a report card on how we're doing on technology. We intend to invest heavily and to make sure we stay on the cutting edge of serving our clients. Finally, I mentioned earlier that we have some geographic expansion plans. Odie recently joined us from many years with California Bank and Trust in East County. We've already signed a temporary office space for Odie and have an official loan production office. We've announced that in a press release. We have recently signed a lease, and we have about 60, 90 days to build out a full-scale branch, and we'll file an application to open that branch. Happy to visit our headquarters office at Symphony Towers, 2 floors down. On any given day, you'll find that we are playing musical chairs with desks and offices, sitting on top of each other, usually working remotely because we don't have enough space. So a number of our staff will be moving out to East County and relocating for a back office. And the other half of the office is to expand geographically into a very attractive market for us that Odie has spent most of her career. And Becky, sitting next to her, spent all of her career as far as I know in East County. So we have a dynamic East County team and very excited about what this holds for the future. So congratulations, ladies, for leading that effort. And I walked in tonight and I had somebody tap me on the shoulder and said, when are we going to ever open up an office up in the LA Inland Empire region? Gil, where are you? Back. So Gil and I worked together decades ago, one of the star performers at a bank that Steve and I really cut our teeth on in our career. And Gil recently sold his company and decided he wanted to get back into banking after a great career. And now Gil is working remotely and staking out the Inland Empire area for us and already getting us into some great relationships. So, we'll see what the future brings, Gil. Happy hunting. Most importantly, when things are working well, you don't change your formula. We intend to do more of the same and continue to focus our primary efforts on owner-operated business. In addition, when we're not lending to companies, we're making real estate loans. One of the holes in our market, in our product line, has been residential mortgages. And we're about to announce soon the launch of a residential mortgage program to better serve our clients and help them with everything from residential construction loans to home mortgages. And again, we think that's another big step forward to help them serve our clients. Has anybody heard about inflation? So we can't have a shareholder meeting without anticipating a couple of key questions that I usually get. And that is, what about the economy? What's going to happen to the bank? Are rising rates good or bad? Well, our bank's model historically has always been designed to do better in a rising rate environment. Margins increase for banks when rates go up, particularly banks designed like Endeavor. We believe we are very well positioned to withstand an economic downturn. It's been 40 years since we had this particular type of inflation scenario, so we can only speculate on the various outcomes. Certain of our borrowers will be impacted. We have to be vigilant and make sure we watch the loan portfolio and help them get through a tough time. In other cases, we will see our margins widen and help our bottom line. Our team of bankers collectively have spent many years of their career in past recessions, and we've had some experience at this. So we're optimistic, but as those forward-looking statements said, there's a lot of variables here. So hopefully between your board and Julian, you bring new talent to our board, and our current board, I think you're in good hands, and we hope and expect to give you good results as we go through this next term. Now it's your turn. I will pause. And Steve and I are here available to answer any questions either now or when we move over to get dessert and more cocktails. Happy to take any questions. Don't be shy.
Hey, Dan.
Yes, sir.
What's your current lending limit for individual at this point?
So secured with our sub-debt, it'll be roughly about $12 million.
Distributions and sale of the bank. What do you see on the horizon?
Great question. That's a loaded question. So we created Endeavor Bank to have multiple paths. There is not a single path that is set in stone. So much of it will depend on things to come in the future and out of our control. What are some of the options? Well, we can just keep doing what we're doing and grow the bank, and as profits increase, as most public companies find, you'll see that eventually reflected in the share price. That's one possible outcome. Or we could step into a public company. How many of you think Endeavor Bank is a public company? Show of hands. We're not. Shocking. Shocking. Everyone says we are. We do have a stock symbol, therefore we must be a public company, right? By definition, we're a public entity. It's a legal distinction. But to be a public company, we have to be in a major stock exchange, like NASDAQ, New York Stock Exchange. And usually companies get a little larger in size, not always, but usually, before they step onto the NASDAQ. And why do you do that? It's expensive. Just to be on NASDAQ, Dan assures me I better be prepared to hire 2 more people for a team just to do the reporting for the SEC register. And that's with no return on those employees, just to keep up with regulation. You anxious for me to do that, Dana? But there might be reasons we might do that. We might do that to attract institutional capital, to attract more investors, to increase the float. The interesting thing about our bank in the last 4 years is very few of our shareholders have sold their stock, a couple hundred shares a year. Not the kind of trading volume that causes your share price to reflect your enterprise value. Remember that slide for 2018 versus 2022? Do you think the company that you paid $10 for in 2018 that just generated $5 million profit and $3 million loans is still worth what we did in 2018? No. So what's wrong with this picture? It's really the float, because we are effectively on the pink sheets. So we have many options. What are some other paths that we might take? We might do a merger someday. We might be an acquirer someday. There are numerous paths, but the reason that we have a stock symbol on the pink sheets, it's really for individual shareholders that need to get out, cannot, or have situations that allow them to be in for the long haul. This is an investment that was designed to be a long-term investment. We said it from day one. We put it in our offering circulars. We repeated it many times. The most control we have as a management team is the financial results of the bank. The stock market is somewhat out of our control. So I would just tell you that there's not a single answer to your question. There's one that the board, the management team will always be looking at each year as we look at all the paths ahead of us, and it's a very exciting set of options of how we can take this bank into the future.
When do you see us having residential lending?
Scott, I would ask you again, put you on the spot, 60, 90 days?
End of June.
End of June.
Are you offering or providing lines of credit for small businesses, large businesses?
Yes, emphatically yes. That is our primary business.
Good. What's the minimum of?
Steve will tell you, what are Dan's favorite 2 words, Steve?
Depends.
It depends. It depends. I have no black and whites on when it comes to lending. So there's a number of factors we look at. But generally speaking, our sweet spot is probably a company borrowing at least a couple $100,000. When you get smaller than that, it's a little more labor intensive. We get the same returns, but it doesn't mean you can't do that. And sometimes we have done that. So it depends.
2-part question. What's the board's opinion, risks, liabilities with Bitcoin? And what's the customer base's interest in Bitcoin?
So you probably saw what happened last week with stablecoin. That may be why you're asking. It's kind of rattled the markets. I think the future of stablecoins in our industry is going to depend a lot on what happens in Congress. Certainly the news of the last week has rattled the markets to a degree. Great article I read today about the difference between stablecoins pegged to the dollar versus algorithms. Well, we have some really good examples here in our community with Silvergate, working on a new stablecoin tied to the dollar, primarily for cross-border exchange of trade. I think that has a good chance of being successful. We're kind of taking a wait and see at our bank. Being a young bank, not ready to bet the farm and go all in. but we certainly are involved in those conversations and looking at where we might play a role at some point in the future in meeting the needs of our clients. There's some very exciting opportunities that we're exploring. Nothing I can share with you today that's definitive, but ongoing research and looking at these types of things. Yes, sir.
There's mixed opinion on whether we're headed towards a recession. What is Endeavor Bank?
I can do it Dan things. I'd have to ask everyone on the team to get the Endeavor Bank. I think it's going to be very difficult to avoid a recession, but I'm not necessarily concerned that this particular recession, if we have one, is like the last one we all went through. So I think you can get into the technical definition of a recession and say we could be in one, but the real question might be how severe, how long, and how will it impact our bank. I think to try to have a soft landing, a so-called Goldilocks landing, is going to be incredibly challenging. We've heard the Fed talk about, the Treasury talk about how there are factors outside of their control around the world, the supply chain issues that may not make this as easy as we've had in the past to deal with inflation. So I'm not an economist. I read like all of you, but from what I read, I think it's going to be very difficult to avoid a recession. That's just my opinion. That's not your bank's opinion.
For the shareholders of the company, we all know what we paid in to get into this company. And since the stock market doesn't really set the true valuation at the moment, do you look at the valuation every year, or do you go to a third-party company based on the earnings to come up with an estimate of where we're at? So, just a question to you. You're a big shareholder as well. So, what is the true valuation if you know it now, or can you provide that on an annual basis?
It's a really great question. How do we as a board, as management, get a sense for what we're really worth? What's our enterprise value? The best way I have found over the years is to bring into the boardroom often investment bankers who specialize in our industry, who provide benchmarking and information to give us a sense of what the bank would be worth if we were to be in an exit mode. And we're far too young to be in an exit mode. But if you just use a simple value, book value measurement, we'd be about $13 a share if we were 1 times book value. Most banks sell for more than that. When we opened the bank, we lost money to the tune of almost $8 million. We were in the hole. And climbing out of that, so we're almost back to our original retained earnings. We're trading back deposit. We'll get there this year if all goes as planned. So when you look at the value of the bank, many banks see their stock price go down for the first couple of years when they're in a lot of losing mode. And as they start to make profits, the multiple of earnings starts to drive that up. So that's one way of looking at it. But the best way is to talk to investment bankers who benchmark what banks would be worth. Then it gets more complicated. You'll hear many investment bankers say, well, you might be worth more to a particular acquirer than another. They're strategic buyers, as we all know. And that's true in our industry just as it is in others. For example, in times where deposits are hard to obtain, a bank with a model like Endeavor that has a high percentage of deposits and checking accounts, free deposits in other words, sometimes sell a premium to a bank that has very expensive deposits. So even when you benchmark, you have a lot of variability. So it's something that we do pay attention to, and we will continue to pay attention to. So great question. Yes, sir.
Dan, is there any particular real estate asset classes that you're staying away from in terms of lending?
We've never been too fond of land loans, land banking. That is something that some banks that I think most of us would know by name went down on a few years back. Construction lending, very carefully, cautiously. More important than anything is the sponsor. Who's the borrower? That means as much to us as the project and the collateral. So back to my statement, it depends.
Retail, we avoid retail.
But it depends. Our favorite asset class is owner-occupied real estate to an operating company. And multifamily, we've done some hospitality, quite an array of different types of loans. But it really is more important who is the sponsor, who's our borrower. Don?
Not a question, but somewhat of a testimonial. I just wanted to say that a little over 2 years ago, we were brought in touch with Endeavor. And when 2020 hit, we lost a year and a half where we had no revenue at all. And Endeavor was with us every step of the way. They helped us with PPP funding and Main Street loan funding to keep us alive. And we're now back stronger than ever. And I just want to thank the Endeavor team for being there to help us as a small business.
Appreciate it. I just want to say one thing about Don's company. Don's in the wedding business. And happy to say that weddings are still in fashion. And we have shut down venues from doing weddings, but people still are romantic. And I think your business is now stronger than ever, if I'm right. So we believe in you, and you had a 30-year record going into it. So it's really all right, I would like to continue this, but a little more informally. We have over here desserts, cocktails, and I'm going to be around as long as you want me to ask questions. Some of you prefer to ask one-on-one questions. Steve is available with a plethora of answers, I'm sure. And by the way, I want to give a hand to my partner, Steve Sefton. Steve. Numbers up here, he lets me take credit for it, but he drives our marketing. So give him a hand. All right, with that, eat, drink, be merry.